Welcome to Money Markers Trading Academy, a lesson I want to record from last couple of months because it is something I have been following from last couple of years, and it is the only candlestick pattern I have been using from last couple of years that made me insane amount of money. As most of you know that I do daily analysis and I talk about these candlestick patterns in every other video. And most importantly, the last candlestick pattern, which is the morning star and the evening star candlestick pattern. A very important strategy which you might have seen in the market when the candles opens in gap up, gap down, especially in the stock market if you trade, where this strategy will be really useful. Even in the commodity market, I'm going to give you the exact rules. So don't skip this part, especially because it is nowhere to be found on the internet, because this is my own strategy that has given me the insane amount of results. And I promise you, it will take your trading to the next level. That is why I want you guys to get familiar with these candlestick patterns, how to identify them correctly, how to trade them correctly, because there'll be times when you see these type of candlestick patterns and trust me, might looks correct, but when you calculate that with Fibonacci tool, then it will not exactly look how you're looking at these patterns. So I'm going to teach you how you can identify the right candlestick patterns, how to trade them. So I'm going to teach you all that in this video. I'm also going to give you the correct Fibonacci sequence settings so that me and you will be on the same page when it comes to my daily analysis and when it comes to taking the trades using these candlestick patterns. And trust me, these are some of the strongest candlestick patterns out there in the market, and I'm going to teach you today how to trade them in a perfect manner. And a strategy I'm going to give you in this video. So starting with 382 Fibonacci candle. So these are one of the strongest signals you will get in the bulls or bears market, that is telling you that if the price action or if the market is going to reverse or not. And sometimes you do mistake of identifying these candlestick pattern. So it is a single candlestick pattern. We're going to go through double and triple as well, starting with Fibonacci 382 candle. Now, the concept behind these candles are, right here we have a bullish, right here we have a bearish Fibonacci candle. Now, as you can see, the color here is red, which does not matter. And as you can see on the bearish candle, the color here is green, which also does not matter. As long as the body is above and the wick is longer in the bullish candle, that's valid. Here, as long as the wick is at the top and the body is at the bottom, that is valid. Color does not matter. Now, very important to identify it as a valid candle. Now, every strategy needs to have an objective rules. Without objectivity, we are not taking any trades, because in the market you will see so many invalid patterns, which I'm going to show you in the real market in a very short while. So grab your Fibonacci tool, which is right here. Now, firstly, I want to show you the settings which I personally use, something like this. Now, these are settings I have in my Fibonacci retracement settings. As you can double click on any of these lines, you will see these numbers. All you need to have these numbers on your Fibonacci rest, just uncheck them so that me and you will be on the same page if you follow me on the YouTube for every single video I post. Now, once we have the settings done, all we need to do, first we need to pull out the Fibonacci tool from the lowest wick, from the bottom of the wick, and we're going to pull it up till the top of the wick, which is right here. So as you can see, the body is now above this blue line. This blue line is my 382 retracement right here. And if the body is above the 382 retracement, it is a valid 382 bullish candle. The concept behind this candle is the seller wants to push the price lower, right? And what happens? The buyers come in and say, no, we're going to push the price higher. They push the market back up, and then it turns into a 382 Fibonacci candle that shows a bullish pressure that buyers are still in control. We are not going to push the market lower. So once we have this move and this candle turns to be a 382 candle, we will have a valid entries. Now for the entries, I'm going to show you in a very short while how to enter using these patterns. Very important. After identifying these candles, it is important to enter in a correct manner as well. So exactly the same for the bearish candle with the Fibonacci tool. I'm going to go it quickly because you know the concept of it. From the high till the low of this candle, something like this. So as long as the body is below the 382 retracement, it is a valid 382 bearish candle. So bearish candle, the body is below, and the bullish candle, the body is above and the wick is at the bottom. For the bearish, the wick is at the top of the body. So as long as the body is below 382 retracement, it is a valid 382 candle. Now next one, we have an invalid 382 candle. Now in the market, you might have seen this candle and you say, yes, I have a valid 382 candle, or I have a valid Fibonacci candle. No, it's not. That is a mistake we do. Now, if you pull up your Fibonacci tool from the low to the high, as you can see, the 382 retracement is right at the body. It must be below the body for this candle to become a valid 382 candle. If it's at the body, it is an invalid 382 candle. So in this scenario, we are not taking it as a trade. So we're going to discard this and move ahead and look for the valid entries. Now, the next one, we have bullish engulfing candles. Now, it is a very popular candle, as you guys might have heard me talking about these candles on every single video. So I'm going to go through it very quickly, but I'm going to show you what's valid and what's not valid. For the valid bullish engulfing candle, the bullish candle, which is of a green candle, must be a bigger candle and must fully engulfs the previous candle from bottom till the top. So engulfs the previous candle fully. That is what we call bullish engulfing candle. Now in this example, in the market, you might have seen some candle that opened a little bit above the previous candle. Now it looks like a bullish engulfer and it looks like a big green candle, but it is not a valid candle. As you can see, the body of the bullish candle has opened a little bit above, and I'm going to show you the example in the real market so that you can comprehend with that as well. So the body opened above, and doesn't matter if the body is bigger, but it is not a valid bullish engulfing candle it must be an engulfing candle from the bottom till the top, exactly like this. So this is right and this is wrong bullish engulfing candle. So we are not going to enter a trade using this pattern, but yes, it is a valid pattern. Now the next one, we have 25% candle or a pin bar. I know most of you have heard me talking about this candle as well. Now, why is called 25% of candle? Because the body of this candle just cover the 25% of the wick. If it's like this, it covers 50% of the body. If it's like this, let's say if it covers the 100% of the body, in that case, that become a bullish Marabuzu candle, which we are not talking in this lesson. But here we have a pin bar or 25% candle. Now for every candlestick pattern, like I said, we have an objective rule. In the market, you might have seen this and this candles. So this is valid, this is invalid candle. Now using a Fibonacci tool from bottom till the body right here, all we are looking at the 25% extension. Now here we have a 25% right at the body, means it is a valid 25% candle. Now, which is not a valid 25% candle right here, the previous example from the bottom till the top. Now, if you see 25% right here, this black line, let me zoom this up for you. It is above the body. See, 25% is above the body. For the candle to be a valid 25% candle, it must be at 25%, must be right over the body, right at the body. Only then it is a valid candle. So from the bottom till the top right here, 25% is exactly at the body, and it is also a smaller body that only covers 25% of the wick. Now in the market, if you say, Omar, it is also a valid 25% candle as it is also at 25% extension right here. You say, yes, it is also a 25% candle. No, it is not, because in this scenario, the body is not 25%, right? You see, if the body was still here, yes, that would be a valid, because it is covering half of the wick right here. As you can see, the body is bigger or equal to the wick in the bottom. So that is why it is very important. The body must be smaller. That is why we call it a 25% candle or a pin bar. And the way we enter the trades using these candles, I'm going to talk about in a very short while. The next one, we have morning star pattern. which is a bullish pattern. Now all these are the bullish pattern except this bearish 382 candle. Everything is going to be same but flipped upside down. So here on the bullish pattern, how we identify this pattern? Now here, this candle is called a spinning top. What does it mean? It means the indecisions between the buyers and sellers. Buyers wants to push the price up, sellers push it back down. Then sellers want to push the market down, buyers push it back up, and in this process it closes equally. Not here, that turns a bullish 382 or pin bar, or not even here, that turns a bearish 382 or pin bar, but instead unequal, because the sellers and buyers are still deciding, they are still confused how the market is going to push higher or lower, and which is what the next candle will decide. So that is what we call a morning star pattern, and that occurs when the market is in a downtrend, and then this pattern forms that shows a signal that price is gonna push higher. How is that? Now the price is pushing lower, we have a bearish pressure, then we have a spinning top, which is an indecision between the buyers and sellers. Now they have not come into any decision that if the market is gonna push lower or higher, and it closes equally. Then we have what? We have a next bullish candle right here. Now it is a candle that we call a decision candle. After this indecision, this candle is formed. Now if this candle is bigger, that is also fine. This is my own rule, but at least I want to see this candle must be half of the first candle that is closed, which is right here. So the candle which is after the indecision candle right here, it must close beyond the midpoint of the first candle. So the body must be above the midpoint of the first candle. Then it decides that yes, we buyers are now gonna push the price higher. Now if you see here, where is the midpoint of the first candle? Right here. So this is the midpoint of the first candle. If the body of our entry candle is above the midpoint, then it is a valid morning star candle, and that also confirmed the trend that is going to likely change the trend, and the price is going to push up from it. Now if the body is higher, let's say like this, that is even the strongest bullish candle, and we have a strongest chance of the price is going to change its trend. If the body is above the wick of the spinning top candle, that is also a very strong signal, as long as we are above the midpoint, and the higher it goes, the stronger the signal gets. So as now you know how to identify a valid and invalid candles and how it looks like, let me show you and let me take you to the real markets and show you how we can trade them in a live market, showing you the live example that has happened, the trades which I've personally took using the exact same patterns. Right here, so the rule to enter these candles are very simple. Now, as you know, these are the reversal signal, and reversals only happens when the price hit the area of value that is called resistance zone, supply zone, or order block zones. This is what you need to identify, and I've already made a video how to trade and how to mark support and resistance. That is also linked in my playlist. So if you come to my channel, scroll down, money markers right here. This is the video how you can trade support and resistance and learn how to mark it correctly. So if you want to watch this video, that's totally up to you. Learn how to mark support and resistance after we mark a valid resistance level, as now we are taking sell trades. So we are only looking for a bearish 382 candle. So if you remember from the lesson, the bearish 382 candle, the body must be below 382 retracement. So let me show you if we have a next candle right at the resistance area. Now to identify if it's a valid 382 candle or not, what we're going to do, grab the Fibonacci tool, something like this, from the top till the bottom wick right here. So as you can see, the body is clearly below my blue line, which is my 382 retracement right here. That is a valid 382 candle. And now, very important, how to trade 382 candles. Now I don't normally enter right at the close because it is a very aggressive entry, and with aggressive entries I don't enter with the market order. Market order is something you enter right at the close at the market price, but instead I enter with a. So the way I enter is 5 to 10 pips below the entry candle. So below this candle, below this wick, I enter few pips below. Stop loss can be above the wick, which is right here. ATR is 18. So altogether is 38 pips above and 38 pips below. Now the benefit of this trade is that, let's say it is an aggressive entry. If the price, let's say, pushes back up, that will save us to trigger our order and potential stop loss. If, let's say, we enter right at the close and price pushes up, it will hit our stop loss. But instead, we're going to enter with the sell stop order. Right here, we have entered with the sell stop order, and let's see if the order is triggered or not. So the order is still not triggered, so we still gonna wait and see if the price hit our order. Now, as you can see, the third 4-hour candle has triggered our order, and that is when we are involved in this trade, and that is how I personally take the entries. And as you can see, the benefit of that, number one, we are entering with a stop order. That is a less aggressive way in an aggressive entry, right? So that is a benefit. If the price pushes up, in that case, it saves us to hit our stop loss. So that is how we enter with a bearish 382 candle. Now let's talk about bullish engulfing pattern. Now, the way we can trade the bullish engulfing pattern is, once the price hit your support area, right, and then it forms a bullish condition, a bullish candle. Remember, the body must be bigger than the previous candle. Once we have that, we are going to enter our trades. Now, as you can see, the price is now inside our support area. All you want to see, a bullish engulfing candle. And if I play the market, what do we have right here? So if you see here, the green candle is a bigger candle than the previous red candle, and that is our valid bullish engulfing candle. If you want to take a look, a quick refresher, right here the body must be bigger than the previous red candle. So as now the price formed a bullish engulfer, and that forms at the area of value at the support zone, I'm going to enter my trade right here, keep my stop loss below my zone to give it an extra room. Let's say if the price pushes lower, it won't hit my stop loss. That is why I want to have a protection of the support area, because we have a liquidity here. So we want to keep the price lower so that in case of volatility, the price will not hit our stop loss and then push higher. So I'll keep it below the zone and take profit. I'm going to go exactly the same 1-to-1 initially, and then it's totally up to you if you want to manage your trade. So that is how I would enter with my bullish engulfing pattern. And if I play the market, as you can see, that hit your take profit, and that would have gone up to 1.421 as well. Now I want to show you one example of an invalid pin bar. Now, if you remember this candle, I've shown you this candle that it is not a valid pin bar, and sometimes you guys see this candle and say, yes, we have a valid entry, and then you take a trade and then the market goes to the other side. That is why it is very important to look at 25% candle that shows a bullish pressure, that buyers push the price back up, leaving the longest wick shows a bullish pressure. I want to show you an invalid entry. As now we are in a valid area of value, we are now in a support zone, which is right here. So all we are looking at a valid condition like bullish engulfers, 382 candles, or a pin bar. So if we have either of the conditions, we're going to enter our trades. So if I play the market, what do we have? See, it is now the body is equally bigger than the wick we have right here. So it is an invalid 25% candle because the body must be 25% of the wick. That makes it a valid 382 candle. If you look at the Fibonacci retracement, right here, the 25% candle, it is something here. So that shows it is a bigger candle, equally bigger than the wick. So that is a good example of invalid 25% candle. Now let's look at a valid 25% candle or a pin bar. Now, as we are in the support area, what are we looking at? We are just looking at a valid bullish 25% candle because we are entering from the support. We only enter buy trades from the support and we only enter sell trades from resistance. So as now we are in the support area, all we are looking at a bullish 25% candle. Right here, what do we have? A bullish 25% candle. To identify that from the Fibonacci retracement from the low to the high, and as you can see, if you look here, it is not a valid 382 candle as the body is not above the 382 retracement. But the good thing is it is a valid 25% candle because the body is above the 25% extension and it is also not a bigger body than its wick. which is right here. If the body was somewhere starts from here, in that case that will be equally bigger body, then we have a wick down there. But if the body is at the 25%, it is a valid 25% candle, and in this type of situation, exactly as a 382 candle, we enter a few pips above, keep your stop loss below the support, and take profit 1-to-1 initially, and then it's totally up to you how you want to manage it. And that is how we enter 25% candles and bullish engulfing candles. Lastly, we have morning star pattern. Just to give you a refresher, the morning star candle happens when the market is pushing down in a downtrend, and then we have a red candle, an indecisive candle, and then a candle that is above the midpoint of the first candle, that is a bearish candle. So that is what we need to look in the real market as well. Now the rule is the entry must happen at the support area. I've already made a video how to identify and how to mark support and resistance. Feel free to check the video and mark your support and resistance as accurate as possible. Now I want to show you a very good example here on pound dollar pair, which we just recently had. Now all we are waiting for the price to push down, hit the support area, and form the morning star pattern. And if we have a valid pattern, we are going to take our entry. So let's see if we're going to get a pattern or not. So as now we just hit a level of support. We have a red candle right here. All we need to see an indecisive candle. That must not be a 382 candle, or that must not be a 25% candle. It must be an indecision candle that has a body equally divided between the top and the lowest wick. So let's see if we get that or not. Right here, what do we have? Exactly the spinning top and indecision candle happened at the support area. If we calculate this candle using a Fibonacci tool, which is something like this. So do you see? It is neither a 382 candle, as you can see the body is below the 382 retracement, and also not a 25% candle. The 25% extension is right above the body, not over the body. So it qualify all the rules, and we have one checklist done. The price is inside the support. Checklist number 2, price must form the indecision candle. Number 3, we must want to see a candle that must be a bigger than the midpoint of the first bearish candle. If we have a next candle, let's say something like this, bigger than the first candle, that is a good entry. If it's bigger than the first candle, then it's even the strongest entry. If it's bigger than this indecision candle and the wick as well, then it is the strongest entry. So that is how we rank the morning star entry according to my rules, the way I've tested them. So let's see what we get. So we get almost the strongest entry. Now if this candle was a red color candle, that does not matter. As long as we have equally high and low wick bodies in between, it is not a 382 or 25% candle. It is a valid indecision or a spinning top candle. So after that, we have a bigger candle. The body is bigger, even bigger than the first candle, and also almost equal to the wick of the spinning top or indecision candle. What it is telling us? It is telling us now, after the indecision, buyers and sellers has came into an agreement that we are now going to push the price higher. The signal number 1, we are in the support area. Signal number 2, we have an indecision candle, and signal number 3, after this indecision, buyers has taken over. So here we enter our trade right at the close with the market order, keep our stop loss below this zone, and take profit. Initially we're going to go 1-to-1, and it's totally up to you how you want to manage your trade. And that is how we enter the counter trend trade at the reversals, which is our reversal entry. And as you can see how nicely the price shoots up from here with exact rules, and how nicely these 4 candles plays an important part in our trading. And you see the importance of identifying a valid and invalid candles. It is very important you enter your trade using the correct candle. Rules must be objective. Double check your entries, double check your candles. For example, if it's a valid 382 candle or not, if the body is above the 382 retracement, if it's a valid 25% candle or not. Sometimes you get confused with these type of candles, which is indecision candles, and you take wrong decisions by entering buy or sell trade. So let's look at some examples of a stock market. Now the beauty of the strategy is that it works really well in a stock market. And in a stock market, as you have seen, the candle open above or below in gaps, and where this strategy plays an important part. So this strategy will be absolutely valid if the price or a candle opens like this with a gap up opening. But if we have an absolutely valid pattern with the gaps, we are good to take our entries as long as it forms a valid pattern, as long as it follows all the rules. Now you already seen the rules. What we're going to look at, a valid area of value. Now this zone was a valid area of value, a valid support zone which was recently broken. Now this zone will act as a level of support if we have a push down to, and if you go back and see, the price is massively pushed up from here, pushed down from here, and if you go back and see, pushed down from here. So this level is a good level and a level of significance. All we want to see, a price to come back in this area and form some sort of condition which is our valid morning star pattern. So let's see and play the market how it goes. And now right here, so if you remember, when the price is coming back to the zone, right, forms a red candle, then an indecision candle. Now it is a reversal strategy and it can be also used in a trend continuation, but the rules will be exactly the same as long as we have a valid pattern. So we have a red candle, an indecision candle, a spinning top candle, and what is the third rule of entry? The next candle must be a bigger candle and it must at least covers or must go above the half of the previous red candle. Now the way you can calculate if the candle is above the half or above the middle point of the first candle, I'm going to give you a very exact rule for that. So first let's see if we get a next entry or not. Right here. So first, the color does not matter as long as we have a spinning top, indecision candle, and the following candle is a good bullish green candle. And also the candle must be above the midpoint of the first candle when the price is pushing down. Now very objective rule for that. So pull up a Fibonacci tool, exactly use the same setting I've shown in the start of the video, from low to high, right? From wick to wick. Now as you can see, 50% is right here, mean the 50% of this candle, the half of this candle is right here, the black line you see, and the body is above the 50% of this candle, means the body is bigger and above the half of this candle, means it is also a valid morning star pattern if this body was higher, and it is also above the previous candle, the wick of the previous candle. That makes it a strong entry confirmation, and that checks all the rules, and we enter our trade here, stop loss below and take profit. Of course, initially we're going to go 1-to-1 for that, and that is how we enter the trade using the morning star pattern. So that was a good example of bullish morning star. Let me show you an evening star pattern which is the opposite of that. Right here on Tesla stock. So what are we looking at? We are looking at the bearish trade, counter trend trade here on this stock. So when the price is pushing up, all we are looking at a major level of resistance which is right up there, and we're gonna go back and see if this level acted as a good level of resistance and a support in the past on a higher time frame. As you can see, a level has been acted as a good level of resistance as a support, and if you go back, nice support and resistance in the past. So that qualifies as a valid level of resistance, and now all we want to do, look for a valid condition from a level of resistance. So let's see how the price action goes. We have hit the zone, all we want to see a valid pattern. Now what do you see right here? An indecision candle. Now I know that looks like a pin bar, but I will take it as an indecision candle because the body is really bigger than the wick. So let's take it as an example, a green candle, indecision candle, then the sellers has taken over. The previous indecision candle means we have a selling pressure. Also, if you remember the strongest entry, if the entry candle engulfs the previous candle, also that is bigger than the first candle. If it was a smaller candle and that crosses the midpoint of the first candle, that is also a valid evening star pattern. So that would be also an entry, but this is the strongest entry as this candle has engulfed the previous both of the candles. So that is how we have an entry confirmation, and we're going to enter our trade right at the close of this candle. Keep the stop loss above the wick and take profit initially. We're going to go 1 to 1, and then it's totally up to you how you want to manage it. And from here we enter our trade, and that is how we take our evening star pattern. And that is a very powerful entry pattern. You'll see that often in the stock market and sometime also in the commodity market. So that is how we take the trade exactly with the rules, without any subjectivity. We have objective rules. Once we follow, we identify the valid candlestick patterns. Once we have that, we are entering the trade. Now, before I end this video, I want to give you a little suggestion. Please don't go and start trading this pattern. I want you guys to do a few things. Number one, learn how to mark these zones. I've already made a video, and do some practice out of that. Look at the previous level from where the price has significantly reacted as support and resistance, then mark those levels. Now, if you want to take your entries on 4-hour time frame, mark these on daily time frame. If you want to take your entries on 1-hour time frame or 30 minutes time frame, if you want to do day trading, mark these on 4-hour time frame so that you can trade on 1 hour or a lower time frame as well. Least I would like to go to 1 hour if you want to mark these on 4 hour. If you want to go on 30 minutes, that is also fine, but make sure optimize your pair. Trading is not a piece of cake. You need to learn the strategy. Just learning the strategy doesn't give you the edge in the market. You have to have a strong trading psychology, learn the strategy, optimize the best performing pairs, and then start trading. Right? Do a demo trade, learn, backtest, and then let me know how you like it. Do it again and again with backtesting. It will boost your confidence because it will then show you when the entries will happen in the real market. You know that you have seen that in your backtesting process. Hope you enjoyed today's lesson. I hope you got a value out of this. See you guys in the next one. Till then, take care.